Hello, everyone. Welcome back to the Daily Gold YouTube channel. Today is Wednesday, November 6th, 2024. Thank you so much for tuning in. And today with me, we have a great guest. We've had him on before. He is Alex Black, the founder and current chairman of Rio2, here to talk about the company and its latest developments. Alex, let me get right into it. The first news you had, I believe last week or so, or maybe the week before, my dates are escaping me. You announced the financing, and so the Fenix gold mine in Chile, you're the 100% owner. It's fully permitted now, fully funded. Can you talk about the financing, how that came about, and also why you decided to go with a prepay agreement over the other options?
Okay, well, thanks, Jordan, for having me on. And it's been a while, but it's good not coming on too often and only speaking when I have to. But yeah, look, it's been an interesting month or so in completing the both the debt financing and the equity financing. Um, the permits, as you have alluded to, have been awarded to us, which will allow us to get into construction. That was done in early October. And we always wanted the permits in hand before we announced the financing. And obviously, the financiers feel a lot more comfortable too, knowing that the project's permitted. But the way it all played out was we had engaged Endeavour Financial, who are really good. I mean, Endeavour, for a small junior company like ourselves that has limited resources and limited skills from the point of view of coordinating these types of financings and assessing these types of financings, it was a great partnership to be linked up with Endeavour Financial. That was an 18-month process as it played out because we were held up with the EIA approval originally. But they provided us with a lot of assistance, and we got to a point where we had what we considered to be a pretty good offer from a debt financing perspective. It was from a resource fund, and what we had to do because of our existing relationship with Wheaton Precious Metals and the stream that we have in place with them, we had to go to Wheaton and sort of say, look, this is the sort of thing we're looking at. How do you feel about this? Because they have to get involved in the intercreditor relationships and agreements between themselves and the lender to put the loan in place. And it wasn't until we got to that point that Wheaton actually said to us, well, that looks interesting, but why don't we put forward a proposal of financing? And we were a bit stunned at that point because we didn't go to Wheaton from the outset. And the reason for that is Wheaton are not a lender. They are a streamer. And we have a stream in place with Wheaton, which we took down in 2021. So we didn't want another stream, or we didn't want a bigger stream. So we discounted them and we said to them, well, yeah, sure, you can put something forward, but you don't lend money as per these other guys. And they said, well, let's see. And so they came back to us, and sure enough, they came back to us with another stream. It had a tail on it, and we just said, look, that's not what we're after. We're not going to do that. And they said, well, what would turn you on? And we said, well, why don't, and this is something that goes back in our history, because back when we did Rio Alto in 2009, 2010, we actually took down a gold prepayment facility with a company called Red Kite back then. And it was for 50,000 ounces of gold in return for, I think it was, no, it was nearly 60,000 ounces of gold in return for about $50 million, sorry. And we were one of the pioneers back in those days. That was one of the first gold prepays ever done in the gold business back in those days. So we brought that up again with Wheaton and said, why don't you do a gold prepay, which means you give us some dollars and we give you gold over a period of time from production. And they thought about it and they said, yeah, we could do that. And it's the first gold prepay that Wheaton has ever done. And what we were very focused on was not having a tail or a gold tail on the prepay, but to be able to pay it off either within 7 years, as we've agreed to, or to pay it off quicker. And so, yes, we came to a conclusion with them on that. And when we analysed the terms that they put forward and the terms that we've entered into with them, we found that the cost of capital was pretty well in the same ballpark as the other lender was going to be. So we thought, great, and it simplified the whole process because there was no intercreditor relationships that had to be dealt with, which would have taken maybe a couple more months. And, we didn't want to delay this project any further. So that's how we came, in a nutshell, how we came to pass to select Wheaton as our financier. It makes a lot of sense. It makes a lot of sense to them. And as you know, and we'll be talking about in this interview, is that there's a second phase to this project, an expansion phase to this project. And obviously Wheaton like this project as it sits, but also can see themselves participating in the future expansion of the project. Yeah, so they're the various reasons why.
Okay. Yeah, just a question for a quick answer. So how much money do you need to spend to get the project into production, from today? How much Capex is left versus how much cash do you have on hand?
Yeah, well, that's the thing. The differential between our Capex estimate and the equity gap was $22 million US. Now, that was the minimum amount of money we should have raised of equity to fill that gap. What we did do is we've raised near on $50 million US. And that was through an equity raise, as you know, we did a few weeks ago, and it was a very successful raise. The target was 40 million Canadian. It was upsized to 55 million Canadian. We had 140 million in the book, so we were more than 3 times oversubscribed. A lot of institutional investors took up the financing, which is exactly what we wanted to see. With the upsizing to 55 million from 40 million, plus the green shoe of the bankers who were involved in doing it, it ended up being $63 million Canadian. And then Wheaton put in 5 million Canadian into a private placement, which was on top of that. So it was nearly 70 million Canadian. The other thing was that going into this financing, we had 13 million US in the bank. So today, as I speak to you, we've got about just under 80 million Canadian sitting in the bank. So we're well funded. And I think hopefully what that makes investors feel is that, we've got a lot of buffer in whatever Capex. Our Capex, as it was outlined in the feasibility study, was, I think, about $135 million. We've upgraded that slightly. And that's all taken into account on these numbers that I've been talking to you about. But it's it's gone up by about 6 to 7% from that 135. So let's call it 145 or something like that. We've got more money than necessary. So we're not going to be one of these companies, as has happened in the market recently, where guys have got to sort of the end of their build and they've gone, well, we've run out of money and we need to raise more money before we get to production. That's not going to happen in our case. So we've got enough cash buffer and enough through that equity financing, enough to cover everything. So yeah, so we're in a good spot. And remembering, Wheaton are giving us $100 million plus another 25 from the gold stream, that the previous gold stream, the 2021 gold stream that they still owe us, as that's 125 million US in total. Plus, they've offered us a $20 million cost overrun facility if we need it, which I don't think we're going to touch because of this cash position that we have. So we're fully covered going forward by debt and by equity. So when we say we're fully funded, we're fully funded. That's it.
Okay, beautiful. Let's talk about the construction. So, where are you in the construction process? I mean, I know a couple years ago you kind of started. Um, so where are you now? How much longer is left as far as construction? When can we anticipate the first gold being produced, if all goes to
Yeah.
plan?
Yeah, I mean, just talking about first gold, we've always said that our target is sort of towards the end of next year. So the end of 2025, which is only 14 months away. But what we need to do is get started, and we are. I mean, we are employing. We have mobilised our contractors. Civil works have commenced on site, etc. So there's lots going on. But probably what will happen is that we'll wait until early in Q1 of next year before we provide final guidance, because by then we've bedded down the mobilisation and the startup of or the recommencement of construction. So then we have a better feel of timing, and then we can give some probably sensible guidance. But let's say towards the end of next year. Whether it happens in December or January is another thing. I don't know, but I think that's where we're heading.
Okay, and let's talk about the operating costs and the AISC. I mean, you said Capex is a little bit higher. So versus the feasibility study, I mean, how much cost creep are you expecting?
Not a lot. And the reason why is that since we did the feasibility study last year, one of our biggest inputs was fuel, and that's not changed very much in that period of time at all. The other thing that's in our favor is when we did that feasibility study, we used 800 pesos to the dollar, 800 Chilean pesos to the dollar on the conversion, and today it's 960, and it's probably only going to get worse now that the elections happened and the US dollar's powering ahead. So that works in our favor, so I don't expect a lot of creep there. We've guided from the feasibility study, we guided 1250 AISC. Is it going to be 1250? Is it going to be 1350? Is it going to be 1200? I don't know. I mean, we're only going to know as we get closer to the time. And obviously that's our job, is to manage that AISC. The good thing about our project is it's very simple. It's run of mine gold oxide heap leach. There's not a lot of moving parts. Really, the biggest moving part is just blowing up the rock, putting it on a truck and taking it to the leach pad and irrigating it with cyanide and then collecting the gold. So it's nice to have a simple process. But the other thing too, I've got to stress is, Jordan, that in today's gold price environment, even if our costs were 1,400, even if it was 1,500, we're not a marginal project, right? We're not a marginal project, and for me, I don't know what's going to happen to gold going forward. We all feel that gold's, in a nice bull market, but is it going to stay around 2,600, or is it going to power ahead, or is it going to fall back down to 2,000 or even less? I don't care really, because when we don't have a marginal project, we are going to make money. The reason being is we've got 5 million ounces outcropping at surface, bulk tonnage, easy mining. It's low grade, but it's bulk tonnage, and you can make a lot of money on that. So we feel pretty comfortable where we're heading with this project from a cost perspective.
Okay, great. Now let's talk about phase two and the expansion. I know you're just getting underway with construction, but the market and people like me, we always like to look ahead. I guess first things first, the study that you were going to do on phase two, what's the status of that?
Yeah, I mean, still in the preparation mode. I guess we'll be giving some guidance on that as well uh, shortly. But what we've been waiting for is a little bit more certainty on the various water options, which is really the critical element of the expansion is where's the water going to come from and how we're going to get it there. So we've been working on that. We're waiting for a few more bits of information to come to us that will allow us to build that into a model and allow us to start a study. I would say, without having announced this, I would say that a study will be done and put out by, during the construction phase of this project, and will be announced, before we pour our first bar of gold. So that gives us any time during the next 14 months. It's pretty hard to throw an accurate dart at the dartboard. So yeah, so we're preparing for that. And just coming back to your comment about the expansion study, that's a big part of this project, right? Starting this project, trucking water to this project is not optimal. It's just, the project's small. Trucking the water is not what you want to do forever. And we've got a 5 million ounce resource within an $1,800 pit shell. So you can call them, almost call them reserves, if you like. And that's what we'll do, is we'll upgrade our resources to reserves as part of this study. But, people bought this financing because of the expansion of this project. Now, what we see internally is that this project can easily potentially quadruple in size from a production perspective. That means 20,000 tons to 80,000 tons a day. And then what happens to the gold production? It goes from around 100,000 ounces per annum to somewhere closer to 300,000 ounces per annum. Now, that then becomes a very interesting and world-class, I would say, gold project. And also what we should be able to show as part of this study is that our operating costs and our unit costs should go down because it becomes more optimal, right? Mining more tons, bigger gear, et cetera, should see the op costs come down. And obviously the cost of water will come down because it's not going to be trucked to the project. And that's expensive. So that's sort of what we envisage, showing a mine that will expand to probably around 300,000 ounces per annum of gold production, probably for around 10 years or so, without further exploration. This deposit, as you can see behind me, is quite big. It's an extinct volcano, and it's 2.5 kilometers long by about 500 meters wide, and still oxide at 600 meters below the surface. So this is a big deposit, and so it will go on for many years. We just got to get it to an optimal size or throughput, which I think is going to be about 80,000 tons a day, and we need to show it in a technical study. And the other thing the technical study will do is hopefully give an outline of timing. So how far away is this project? And I would say, from a rough perspective, it's somewhere between 3 to 5 years from now, right? So we'll be producing 100,000 ounces per annum for 3 years, 4 years or so, and then we'll ramp up to a bigger throughput and a bigger production rate. So that's what's ahead of us, but we've got to show it, do the work and show it. But not only that, we have to execute and deliver on the first phase of the project. And that's the good thing about this project is it's not hundreds of millions of dollars of Capex. We're going to spend south of $150 million to bring this starter project into being. And what we're going to do is de-risk the whole thing from the point of view of, yes, it works. Yes, the leach kinetics are good. Yes, it's doing 75% recovery. Yes, it's doing 1250 AISC or whatever the AISC ends up being. So, they're the things that are going to come out of starting this project, which will, help us a lot when we come to expand the project.
Right. And yeah, I know we're getting into forward-looking statements territory, so I'll give that disclaimer for our viewers and listeners. Uh, can you
I've
say
tried to
any?
be as rubbery. I've
Yeah.
tried to be as rubbery as possible.
Can you say anything about, I mean, what kind of capital that might require to
Yeah,
expand
I
to
mean,
that
once again,
degree? And
it's a guess. Yeah, I mean, look, we've done some work in the past in respect to project capital, which means what do we have to spend at the project? Forget the water, just what do we have to spend at the project? And that, our first guess was, around $200 million. It's probably going to be more than that, I guess. I mean, I don't know. We have to do the detail. So, that's sort of quantum. So it's not, not crazy numbers. Um, then it's going to be, well, okay, if the water's provided to us by a third party, then there's no capex involved. Then it's just an OPEX. How much are we going to pay for a cubic meter of water? But then again, one of the options might be that we build the pipe in conjunction with, maybe one or two of our neighbours, remembering we're neighbours with Kinross and we're neighbours with Codelco in that area. So maybe we team up, the three of us, and we build a pipe, et cetera, et cetera. So there's a few things that need to go into it, and the capex needs to be worked upon and defined. But yeah, but the good thing is when we get to that stage, we're cash flowing. We've got a track record of paying back debt. We will have paid back a good proportion of this gold prepay, and we'll be ready to invest more money in the expansion.
if you would need help funding that, I would imagine your relationship with Wheaton that
Oh, yeah, well,
that
that's
could
a given.
really limit dilution, future dilution.
Yeah, that's a given. I think obviously what Wheaton have showed in partnering with us on this project is that they are willing to stand by us as long as everything makes sense. And that's going to be our job, is to prove and show a project that justifies their potential involvement in the future.
Yeah, and I would imagine as long as no chinchillas are harmed along the way.
No, well, that's another story, a long story, But there's going to be, we have made some very important undertakings as part of our EIA approval to be good stewards from the point of view of fauna in the area. Camelids, chinchillas, lizards. There's all sorts of, things going on in that area. But what we were able to clearly demonstrate was there was no significant impact on those various populations of animals in the area by this project. And that's the key point. And then what we've got to keep on demonstrating is that that's the case. And any mitigation that we have to do, we have to be proactive and on top of, as soon as we know that we have to, swing into, saving this chinchilla or this lizard or that, vicuña or, alpaca or whatever it is. So, no, I mean, we were unjustly stopped there for a while. That's a given, and that's been admitted to by the government. Now it's a matter of letting us go, but letting us go in a responsible manner. That's the key.
Right. And yeah, Alex, before we close, is there anything you want to comment on? Or actually, the first thing I should ask, are there like what news developments should we look for over the coming months and quarters? I mean, it's funded, you're going to start construction. What, it's kind of a boring period for most investors, but what is there any other news we should pay attention to?
Um, well, I think the study for the expansion, there'll also be an associated environmental impact study initiated for the expansion project. We'll talk about that. Um, I've always said that I want to be part of consolidation in the gold sector. I don't think, and that's not saying that, I think somebody's going to want to buy us because we're not for sale, but we could do some interesting things, in the space from a point of view of consolidation, rolling up some other assets, et cetera, et cetera. So, we've been looking for 6 years for at other things. Maybe there's some things we can talk about in respect to that going forward, but I don't, nothing imminent. So yeah, I mean, but yeah, putting our heads down, executing and delivering on Phoenix Gold is really our number one priority and number one focus. That's for sure.
Okay, and yeah, again, before I let you go, Alex, anything you want to mention that I haven't covered?
No, I think we've covered just about everything. I mean, look, I really appreciate the support. I know some of your followers have supported us through a lot of the thick and thin of our existence. As I say to people, we're a long story. We're not a short story, so you have to be willing to go long on this story. Today here we are with an asset with an MPV at today's gold price of close to $800 million, and our market value is just north of 200 million US. So the penny's still to drop here in respect to our story in the market. The market's been full of noise from other things and also from some negative events, etc. So once we get further advanced on this project, I think investors will start to tweak. But don't forget, 48 institutional investors took up our financing that we just did. So we've broadened our base. We've been able to capture a lot more eyes, and that should put a lot of the retail investors that are in our story in a good position, feeling good about where we're going. And I see this as a 3 to 5 year proposition because, when we show and actually execute on this expansion case, I think somebody else will want us. And we're fine by that. What your investors should know is that we're mine builders, but we're not wedded to our company, and we are shareholders as well. And like we did with Rio2 back in 2015, we sold that for $1.2 billion to Tahoe Resources. There was no question that was a good deal to do at that time. So yeah, I think we've got a lot of value to create here, and we will. And we're very thankful for the support from all over for what we're doing.
Well, thank you, Alex, and thank you on behalf of all shareholders. And with that being said, that wraps it up for today. But would love to have you back. Maybe maybe when you start construction or when you get that feasibility study out on the
Yeah, and
expansion.
yeah, when we got something newsworthy to talk, I'd rather speak to you, every 6 months rather than every second month because, I'll have something significant to talk to you about. So, yeah, when we've got something that's, newsworthy and interesting from your perspective and from your followers' perspective, then I'm glad to be back.
Yeah, well, we're glad to have you, and thank you again, Alex.
Okay, thanks, Jordan.